Curious about where the stock market's headed? In the next few minutes, we'll dive into what could be on the horizon and what it might mean for you. The stock market can be a wild ride. Some days it's up, some days it's down, and other times, it's anyone's guess. But for those of us who want to understand what's happening, let's look at some key things that could shape the next 6 months. Whether you're a seasoned trader or just watching from the sidelines, these insights might help you feel more prepared. Let's start with something that impacts us all: interest rates. When the Federal Reserve decides to raise or lower rates, it ripples through the market, affecting everything from loans to stock prices. Here's what that could look like in the months ahead. If the Fed keeps rates steady, we could see growth stocks like tech hold their ground or even climb. But if the Fed lowers rates, that might fuel a rally, since borrowing costs drop and companies invest more in growth. On the other hand, if rates go up, it could mean a bit of a squeeze for stocks, especially those that depend on cheap credit. So keep an eye out for Fed updates. They can set the tone for a lot of what follows. It's not just the US that moves the market. What's happening around the world, particularly in China, makes a big difference. China's economy is huge, and when it's thriving, global demand for things like energy and goods picks up. But lately, the forecast has been mixed. If China's economy shows signs of bouncing back or they introduce big stimulus measures, that could lift stocks, especially in energy and materials. But if China's growth keeps slowing, demand for these sectors might shrink, which could weigh down companies that depend on exporting to China. Every quarter, companies open their books, and we get a clear picture of their financial health. With inflation, high costs, and changing consumer demand, investors are watching these reports closely. So what's coming up? If companies report strong earnings, particularly in tech and consumer goods, they could spark a rally, especially in those sectors. However, if earnings disappoint, especially in retail and consumer-facing companies, it might signal that people are pulling back on spending and stocks could feel the pinch. This season will be a real litmus test for how companies are adapting. Volatility is just part of the game, especially when factors like inflation, supply chains, and global tensions are in play. Over the next few months, we might see more ups and downs than usual. If inflation drops, investors might feel a little more at ease and sectors like tech could gain. But if inflation spikes again, or we see new global tensions, defensive stocks like utilities and consumer staples might be where people turn. For those investing, it's a good time to think about balancing risk across different sectors. Despite the caution in some areas, tech is one space people are watching closely, especially with AI advancing at lightning speed. The buzz around AI and automation could keep momentum going in this sector. If AI-driven companies post strong growth, we could see renewed interest and higher stock prices in tech and related industries. But if AI expectations fall short, tech stocks might take a hit as investors reevaluate. Either way, tech remains an exciting space, though a bit risky, so consider diversifying if you're jumping in. So, what does the next half year hold? Well, it's a mixed bag of potential and challenges. Keep an eye on interest rates, global events, earnings, and those big tech moves to stay ahead. Remember, the market has its highs and lows, but with a thoughtful approach, there's always room to navigate the unexpected. Stay tuned for more updates, and here's to smart, strategic investing in the months ahead. For more insights and market updates, watch my other videos and stay tuned. Happy investing!